Hey everyone, it's Friday morning, October 25th. Welcome to Capital Markets Quickie. I'm your host, Endrit Sella, and let's talk about what was moving the markets yesterday. Before we dive in, a quick reminder, today's episode is sponsored by AMF Capital, Asset Management Frankfurt. For personalized investment solutions and high-quality mutual funds, visit amf-capital.de. So let's start with the Nasdaq, which led the way on Thursday. Tesla really took center stage with a massive 20% jump, its best day in over a decade, after the company reported its biggest quarterly profit in more than a year. Elon Musk's bold sales forecast, predicting EV growth of 20% to 30% next year, helped lift hopes for a strong earnings season overall. That boost gave the tech-heavy Nasdaq a solid 0.8% gain by the close. The Standard & Poor's 500 managed to squeak out a 0.2% gain, but it didn't have an easy day. It dipped into the red earlier on before clawing its way back up, thanks to Tesla's surge. Meanwhile, the Dow wasn't as lucky. It extended its losses from the previous day, falling nearly 150 points, or about 0.3%. IBM weighed heavily on the index, dropping over 6% after missing its revenue target for the third quarter. In other news, Boeing had a rough day too, with shares slipping around 1%. Striking workers rejected the company's pay deal, adding to the woes following its hefty $6 billion quarterly loss. As for the bond market, the 10-year Treasury yield, which hit 4.25% earlier in the week, eased a bit, settling around 4.2%. Investors are still grappling with concerns about how fast the Federal Reserve will cut rates, if at all. On the economic data front, jobless claims unexpectedly fell last week, coming in at 227,000 compared to an upwardly revised 242,000 the week before. It's a bit of a mixed signal, especially with volatility in states recently hit by hurricanes. That's your market wrap for today. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Sella, and I'll be back tomorrow with more updates. Have a great day ahead.